Hello traders, welcome to your technical market update for Monday the 9th of February 2015. As I mentioned in the economic calendar video, we have a very quiet session coming up for us tonight, which isn't unusual the first Monday after non-farm payrolls. So we do expect some very quiet price action and not a lot of opportunity for momentum swing trading. Maybe the guys out there that have a scalping strategy, you might be able to pick up a few pips. I did put out a trade earlier and I am trying to trade the close of the gap on the Australian dollar, and I'll get to that shortly. Let's have a look at the charts. We're on the New Zealand versus the US, and as you can see, Friday's better than expected non-farm payroll really put a boost into the US dollar, and we did see all other currencies up against it come off, and New Zealand was no exception, performing this quite powerful bearish engulfing pattern, which does suggest further downside to come, and the current major resistance level is 74.5 cents. Now, having said all that, we could see it just grind a little higher before we see the next move. I don't expect the market to just continue on and just continue to fall quite heavily throughout tonight's session. If we go to a shorter time frame, we may see a break of the lows on Friday, and we may see it have a little run towards the 73 cent range, and you may be able to scalp that, pick up a few pips, get out and call it a good night. The Australian dollar, as I said, we've had a big pullback due to the strength in the US dollar on Friday, and now we've opened up with a gap. That gap is due to weaker than expected China data, but I think that gap will get closed tonight, and then the market will resume trading as normal. If we go to a shorter time frame, 4 hourly, you'll see that gap's quite prevalent, and we're still in this sideways range pattern. Resistance is still 78.8 cents, and I really want to see it get below 77 cents before I could say that momentum's kicked back in and the market's ready to continue falling along with the trend. So right now we are in a consolidation phase as the market is focused on Europe going into this week. If you have a look at the pound, it had a pretty good rally last week, and then it did come off due to the non-farm payroll. As you can see, now testing historical major downtrend line, and we had a breakout of that consolidation that we were focusing on. Now, it is in a difficult position now. I think it will consolidate around this region, and if we do get a break above the old high, that definitely suggests that we have a bottom formed, and we could be seeing pound strength come back into the market. But if not, we could see the market push the price action back down into this consolidation range. I don't see a huge trading potential except for the surprise to the upside as being a good entry at this point. So I don't expect to be putting out a lot of pound trades. Data is that they are going to sit on their hands for a little while, and they've got the ability and the economy stability to do that. So I don't see any major physical change in policy change for them to see huge price action. It's going to be associated with the US dollar, as well as a bit to do with risk on and risk off due to the Eurozone. Now let's have a look at the Eurozone. And it's quite clear that we have trended in a very tight and uniform consolidation here. And that's because the market is very heavily focused on Greece right now, and they're waiting to see what is going to happen. Is Greece going to strike a deal with the ECB? And the meeting for that is expected to be held on Thursday, but you will start seeing, I expect, more and more officials coming out and talking to the press, but probably from tomorrow, Wednesday onwards, and we could start to see some price action. I think this level will be broken, and we could push up into the $1.20, which is a major psychological level when it was broken. It could push up and test this if we do get a deal struck. And it does look like that Greece will remain, and the terms and conditions are favourable, that Greece has some fighting chance of being able to meet the demands of the ECB and Germany, since that's who they'll be essentially borrowing the money from. So we'll keep an eye on that, and I am fully aware and cautious of a breakout to the high side, and if so, I think that that's due to optimism of the market. not because the euro economy is in a great position, but it's just a relief rally, and not one that will continue soaring for months. The economy is still in a bad way, and price action will prevail. It's just in the short term we could get a relief rally. We won't be looking at the Swiss franc. It's still too illiquid. The spreads are still too wide. But we'll have a look at the US CAD here on the daily chart, and you can see it's consolidated after its pullback, the trade that we made, and now we have support at $1.23.5. Now, if that's broken, we could see it move lower. It is subject to oil prices. Oil prices are testing a significant level. If I bring up oil here, I'll go to a daily chart and refresh that. You'll see that we had it test and reject the downtrend line and then have another rally, another run at it. I think that momentum is definitely to the upside, and we could see oil prices actually form a bottom here, and support is at 48 cents, and we could see some moves higher, especially if we take out the high. It's definitely indicating that it wants to continue higher. So with oil prices moving higher, we could actually see the CAD gain a little bit of strength, and we could see that support in the US CAD come under attack. So we'll keep an eye on that, and it all depends on the US dollar story. But I think momentum will move away, and the story and the focus of the market will move away from the US dollar now that majority of the hardcore data has been released, and the market will go back to focusing on Europe and oil prices due to oil's linked to Europe as well. Low oil prices does help Europe considerably, and the market is focused on that. The US dollar JAP, if we have a look at that tight consolidation range definitely was broken out of, and it was broken out in the largest price action movement we've seen on Friday. And I think that we're now testing the downtrend of a larger version of a consolidation, and with the US dollar strength and the Japanese economy not looking so good, we could see a breakout of this high, and then this entire pattern form a breakout and continue higher. We'll have to keep our eye on that and try and find some entry opportunities to get into that trade and hopefully make some money. But I don't know if we'll get that opportunity tonight. We'll have to wait and see. Like I said, it's a quiet session, not a lot of data. I don't expect a lot of price movement. I'm happy to try and make some money on this closing of this gap here. It's at 77.629. I got in at 77.7, and I'll get out at 77.9, pick up 20 pips, and I'll be happy with that tonight. If I can find some other opportunities, I'll definitely be jumping on board, and I'll be posting those on Twitter and Facebook. I also put out a video today called Forex Fundamental Snapshot. Have a look at that. It's basically a little version for you on the fundamentals of all the ECB economies, and I think it's one that will be able to help you going forward. So until tomorrow, be patient and disciplined and trade well.